Hello, welcome to IGTV. I'm Angeline Ong, and this is your special look ahead to the week starting the 25th of March. Now, it's already been a huge week for central banks, given we're seeing a huge reversal in play here. SNB kicking off the rate cuts amongst central banks. ECB likely to follow in June, and the Bank of England and Fed to come next before the summer is over. That is the expectation. But in terms of what we've got on the economic diary in the coming week, Japan. First up with the minutes, we've also got new home sales and the Chicago Fed National Activity Index. Further along the week on Tuesday, look out for consumer confidence numbers out of Australia and Germany, and also the Kingfisher Home Price Index from the US, and more consumer confidence figures from the US. Midweek, it's all about inflation in Australia and more consumer confidence numbers from France. EIA crude oil inventories from the US will be interesting, given we are recently seeing oil prices tick higher. Industrial profits from China will also be of interest to those looking out for this recovery that way. And on Thursday, the big one to look out for, retail sales, Germany, Australia, and of course the GDP growth readings out of the US and the United Kingdom. Friday, it's the core PCE. Boy, that swung around really quickly, but we also have core CPI from Japan and France. Let's cross over to Tasty Life's Tom Sosnoff now, joining us from Chicago. Tom, so much buzz out there. More recently, of course, the buzz around Reddit. Easing at the moment, I can see, after a strong debut on Wall Street. What's behind the easing?
It's a very interesting IPO. First of all, we haven't had too many IPOs. Let's put it that way. So the IPO market's been really quiet, and Reddit was interesting for a lot of reasons. It's kind of the first, let's call it social media, tradable social media app. And I think in the current environment, with all the stuff going on in the US about, banning TikTok and things like that, I think that the social media space kind of came to play in support of Reddit. And Reddit's been around for a long time. I think it's a really interesting app. It's really, I think it's a solid, not piece of technology, but it's really a solid concept. And I mean, personally, I love Reddit. So, I think it was a very successful, I know it was a very successful IPO. And I think a lot of people, especially Redditors, are going to treat it almost like, this is kind of a buy and hold play, I think. I think this is a passion play a little bit. I think Reddit's going to be a very popular app.
It does look like a passion play, especially as well, because I heard that they've offered shares 8% reserved actually for eligible users and moderators. It does really rely on this vast numbers of volunteer moderators and certain board members. Do you think this gives it a bit of a cult status?
I do. And I also think, it's really important. The moderators on Reddit, the Redditors, they put in a ridiculous amount of time and resources. It's really hard to do that. And they're not rewarded at all. It's like they're self-policed. And I think that giving them some skin in the game was a great idea. And I think it's really smart. And I like how Reddit handled this whole thing. Listen, it's the stock maybe at the high end of the range right now, and who knows where it eventually settles in. It's down a little bit from yesterday's, but it's in the middle of yesterday's trading range. I mean, let's see how it plays out over the next, 3, 6, 9 months. And hopefully, once we have options, it'll be a really good trading vehicle.
Cool. And one key thing as well that everyone's been asking, at least this side of the pond, Tom, with the Fed, sticking to the hymn sheet really, and saying that the economy is moving the right way for these cuts incoming. Essentially, does that mean more of this melt up on Wall Street, or are we overdone?
Well, I mean, you're talking to a contrarian who's a little bearish here. So I think my view is a little biased, but I think the Fed has done a remarkable job of staying out of the way and letting the market do its own thing. And I think that's something you can compliment the the Fed on because they haven't tried to bully this market, and they've let kind of interest rates settle in where they are. And rates right now are nowhere near like a cut level. They're actually, if anything, they're closer to a raise level than they are to a cut level. So I think the Fed is kind of letting the market dictate, what their next moves are. I know what they'd like to do, which is cut. I don't know if they can, if the market's, where it's currently trading. But as far as the stock market goes, the stock market has taken that as a sign to essentially say, hey, as long as you don't mess with anything, we're just going to keep buying stocks because the liquidity is there. There is just a lot of available cash, and there aren't that many alternatives right now. And I mean, personally, I think the stock market's very rich. Personally, we're at record highs in virtually all the indices. And I think there's not necessarily like huge downside risk, but I do think the pot odds, meaning the payout, favor the downside over the upside here.
Thanks very much. And certainly you're right there in terms of, the markets are really rich, Tom. We're looking at perhaps another higher open today on Wall Street. Quickly, just running you through some of the corporate numbers out next week, because it is still quite busy given it is already at the end of the period. We've got Kingfisher out with full year earnings, Penn Group out with a trading statement, and then Ocado, Fevertree, and John Wood Group, the ones to look out for, along with Flutter Entertainment on Tuesday. On Wednesday, it's all about retail, H&M, Fast Retail out with first quarter earnings. Get a bit of a breather on Thursday, but on Friday, watch out for Walgreens, Boots Alliance, second quarter earnings, along with EnQuest as well. So really quite a busy week, despite the fact that we haven't kickstarted the next earnings season just yet. But for more analysis, do find us on YouTube and also at IG.com. I'm Angeline Ong. This is IGTV.